This is the briefing for Wednesday, May 3rd. Well, the Fed announcement is behind us, and the only thing we have in front of us for the rest of this week are the employment numbers that come out on Friday. Those will be potentially market moving numbers, at least in one direction or the other. In last night's briefing, I talked about the fact that yesterday's low was going to be extremely important in terms of at least short-term support. Now you can see this is hourly charts of the spiders, the Qs, and the Russell IWM. And you can see the spiders are right at yesterday's low. The Qs have traded slightly below it, but still in the area of that. And the Russell, which is very surprising, is not even close to yesterday's low. It was previously, or in a little bit longer term time frame, on a daily chart that the Russell is farther to the downside in terms of price development than the other two indices. So it's going to be very interesting to see what happens in tomorrow's trading. Now, it is typical that, as you can see, we did have some volatility on a shorter term chart. There's a lot more buying and selling wicks on each candle, but the volatility was around the announcement, and then we got the comments section by Chairman Powell, and I guess the market took his comments as being very hawkish, and what we have then is a pretty good sell-off coming down and testing the previous day's low. Now, it is common, and I state this after every Fed announcement, that traders go home, investors go home, and they reevaluate the comments, they reevaluate what's happening, and they come back, and sometimes they have a different determination of value than they went home with. So tomorrow's trading is going to be very, very important, especially at the open or the first hour of trading. So watch that very carefully. If we open below today's low, below yesterday's low, that's going to be a pretty clear signal that we're potentially in the process of breaking out to the downside in an intermediate term time frame. Now, normally, I would suggest that if we get a lower low below yesterday's low, to watch what happens with market breadth, because if there's a divergence, then that would suggest then that the market is strengthening and you're going to see rotation back up through the range. Now, you can see in market breadth today that we were not very negative, only 684 shares in the NYSE, two shares positive in the NASDAQ, and 34 shares positive in the Russell. So having a divergence would be surprising, because you'd have to have a lower low and then basically positive market breadth. So watch it, but I doubt that that's going to happen. Now, if we do get a lower low and breadth readings are weaker than what we see in today's trading, then that's going to suggest potentially the market is weakening, and we're going to see the next short term, or I should say intermediate term potential support level tested. Now, those levels, once again, here's one time frame of rotation, here's a second time frame of rotation, and we're coming down now, getting ready to test this 405 area in the spiders. Volume was not great today in the spiders. You can see breadth was a little bit stronger, but we really didn't take out, so there's no divergence. We didn't take out yesterday's low. So watch what happens, especially if and when the market tests the 405 area, and then of course resistance is 415 to 420. So we're just caught in this area of rotation. I mean, and this goes back all the way to March 31st. So we're basically almost 2.5 months into, or 2.5 weeks, I should say, into this trading area, and this is a rotational pattern at the upper extreme of this rotational pattern. So it's going to be very interesting, and I just want to review once again. Watch this rotation right through here at the lower extreme that led to rotation back up, rotation at the upper extreme that led to rotation back down, then another thrust up, rotation at the upper extreme. So it's going to be very interesting. The most important intermediate term support area in the spiders is going to be 380. If that's broken, I think that's going to open up a potential test of the October lows of last year. Q is basically in the same situation, rotation at an upper extreme of this rotation here. Resistance is going to be 320 up to about the 324 area, and then support comes in right around the 312, 313 area down to about 310. Then, of course, below that is going to be the 300 area. Volume in the Qs ticked up a little bit. You can see breadth was positive. We did take out the low from yesterday in the Qs. So that is an internal divergence that suggests potentially that the NASDAQ at least was showing some more strength. But this is basically flat. I'm not giving a whole lot of credence to the divergence that I've been talking about. So, and the Russell you can see is completely different from a short-term perspective. As I showed in the hourly chart, the Russell is showing a little more strength in terms of price development, but in a longer-term time frame, you can see it's pretty clear this rotational pattern is right at a very important level at the 170 area. And if that's broken, then it's going to open up a test and potential breakthrough of the October lows from last year. Volume increasing over the last couple days in the Russell. So it's going to be interesting to see exactly what happens in tomorrow's trading. Now, if you remember from yesterday, we were at a point of being extremely oversold in the NYSE and so basically oversold in the NASDAQ. So we worked that off in today's trading. We're basically neutral in both. The NYSE is showing a convergence of the indicator, which suggests a tightening in the market and a potential breakaway move or a good move in one direction or the other. And then if we look at what's happening with total volume, you can see we have this a slight tick up yesterday, a little bit higher volume in today's trading, and of course volume in the NASDAQ is just really beginning to explode. Even though we're in a rotational pattern, which is very, very unusual, but you can see 3 days of basically moves to the downside. So those 3 days are marked with this level of volume increasing as well. So tomorrow is going to be very, very important trading day, and then how we finish the day after, or we'll finish the week after the announcement of the employment numbers on Friday. Have a great night, and it's going to be an interesting briefing tomorrow.